guys, welcome to this video. In the one I'll try and explain in the easiest way how I trade and how I view the markets every day, and I'm capable of getting entries in 1 minute. That's the lowest time frame in the TradingView's free version. So the main three concepts that we need to know is, first of all, it's time. Second is market structure. And three, everything else. That in my case is ICT. Let's go one by one. First is time. That's the most important thing. Time means to trade only in the kill zone, ICT calls them, or basically the sessions. We got Asia, London, New York, that we all know it. So the important one is London and New York, because Asia, I think very rarely people trade, but just for the sake of it, Asia is from obviously always New York ES time. Okay, that's important, so we be in sync. So Asia would be 8 p.m. to 12 o'clock a.m. or the open day. Okay, then we have London, my favorite, the one I trade, 3 a.m. and New York I would consider to first 8:30 a.m. and then the New York Stock Exchange, that's at 9:45 a.m. Okay. Sorry, why do we use these times? Because these are when the volume kicks in. The volume, the manipulation, the entries, the patterns, everything occurs during these timings. Okay, so I focus in London because I like to trade one session, because the main concept of getting into trading, I think the majority of people get into this because of the freedom, not because of continue being slave of the system. So if you want to trade Asia, London, New York, you want to be 24/7 in the charts, you are an idiot in my opinion, because you still a slave to something else. Instead of your job, you are a slave to the charts. So that doesn't make sense. And also we humans can maintain a high percentage of focus, the maximum focus, early morning when we get up, because we're fresh, and for 2-3 hours straight. After that, the focus starts decreasing. We start procrastination, we start distracting ourselves and getting like bored, you can say. So in my time zone, London is during the morning, so it's when I get up, so it's perfect and I'm fresh. So I like to trade my session during 2-3 hours. The trade can be open, okay, it can be with stops and break even or whatever, but you analyzing and waiting for more opportunity after 3 hours of session is not recommendable in my opinion, because your focus is not the same and you start seeing things that are not correct or where you're supposed to not see them. Okay, so this is the time based thing. There's no more into it. Okay, there's no more science, it's just this. So we trade around this time, and most important, after 3 a.m., never before. Why? Because when the open happens, the London open happens, those big players will come and manipulate price. Not always, but most of the time, and we don't want to be in that manipulation. So we wait for it and then we get into the trade. And if there is no manipulation, we miss the movement or whatever, no problem. A day that we don't trade is not a loss, it's just a break-even day, because we have not made money, and that's all. So this would be the time thing. Then market structure. This is so important that the people, especially the advanced, that are just there, missing that last bit of profitability. It's the market structure, because when you started trading, the first thing you learned was market structure. One of the first things, obviously, they always teach you. Remember that video where a guy or anyone was telling you higher high, higher low, higher high, higher low, higher high, and the downtrend, lower low, lower high, lower low, lower high, lower low, right? This is one of the first things you learn: uptrend, downtrend. This is market structure, and this is so key. This is the whole thing of the market, and I'm going to prove it to you. And then I go with everything else. Everything else, I mean any concept, any study, because there are many. There are support resistance, there's supply and demand, there's ICT, there's smart money concept, there is Wyckoff, there is indicators, there is I don't know, many. Everything else, that's your choice. The one you like, the one you feel makes sense, the one clicks with you, the one you're comfortable, you can view, whatever. For me, it's ICT. Okay, I went through everything, and finally ICT, because he explains each of part of the graph of the candlesticks, the price action, basically each of the parts, and he tags it with a name and specific rules or specifications of that for it to be valid. So it makes it very clear and very precise. It's not like support resistance, where you can see a support here, you can see a support here, then the other support will get broken, then again coming back. It's more like how can I say it? It's like, for example, a person who studies ICT fair value gap will see it here. The Chinese guy in China will see it. The guy in New York is seeing it. The guy in London is seeing it. Everyone is seeing the same fair value gap. But a support, for example, one guy is seeing this one, then another guy is seeing this one, and not this one, or someone is seeing this one. So the fair value gap is everyone is seeing the same one. So that's ICT. It's like more specific. That's what I like. But you're free to choose anything, because if you have market structure, everything else comes later, and I will prove it to you. So let's go with the market structure. That's the main topic we're going to discuss, because then time is just time. You have to be strict with yourself, disciplined to straight on time. And in my case, I'll show you with ICT concepts that most of people now are trading using his PD arrays, basically, okay, with everything falling into place. So we have structure that goes higher high, higher low, higher high, higher low, higher high. Okay, when we are in uptrend, we want to buy. That's what is called follow the trend, or follow the order flow, whatever you want to call it, institution order flow, whatever, different names. So where you want to buy? You want to buy here, and you want to buy here, right? You don't want to be buying here, neither here. So how do we buy here? Very, very simple. Here's where the Fibonacci comes in play, and I'm just going to remove all this just for the sake of simplicity. But these are the standard deviation that we can use for take profit, and this is the optimal trade entry. We all know about it, and we're going to keep the 50% only, okay? Because with this we can measure the impulse, the movement, the impulse to the upside in this case, and we can calculate where we want to buy, like how ICT himself explains. This would be equilibrium, 50%, and anything above is buying expensive, anything buying below is discount. So we want to buy only in discount. So we would put our Fibonacci like this, wait for it to come back into discount, okay, and react to some PD arrays that's here, okay. This can be any PD array or anything else you're trading, SMC, support resistance, whatever, okay. And what happens is that this would be a high time frame, and the low time frame has a downtrend here going on, something like this, right? Okay, so once it comes here into the discount in the PD array, it will create an entry pattern, okay, and there is only 2 entry patterns. That's all. The entry patterns are, the first one is in this case, okay, the buy, like 2 for buys and 2 for sells, is the opposite. So in the buy case, it would be price coming down, oops, this is the one, price coming down, sweep of liquidity, come back up, break of structure, come back to discount, buy, and go up. This is called sweep of liquidity. It's called break or fair value gap. Sometimes there is a unicorn setup. Sometimes it's a 2022 mentorship entry pattern. Thousands of names, okay? But call it whatever you want. Call it entry number 1 if you want. This is one entry. And the second one is price comes down, fails to make a new low, goes up, discount, entry, out. I mean up, sorry. This is a fail swing. This is a break and retest, support resistance. This is called a double bottom. It's called divergence if it is there, whatever. This is the entry number 2. This is the only 2 things the market can do and give you your entry signal. So we go into the low time frame, we wait for our time zone, say that this is London session, it's coming right into the PD discount array of the big time frame, and the structure is starting to swift. So here we have the, let's say price comes up one more time, sweeps this low, breaks the high, market structure shift, comes back to a fair value gap, breaker, a support resistance, whatever, and we take a buy. Where do we target? We can target 1 to 2. That's another thing I will comment on. Risk reward, you have to think that the home runs exist, but they are not realistic. Okay, you won't catch every day 1 to 4, 1 to 5, 1 to 8, 1 to whatever. What is realistic is a 1 to 2, a 1 to 3. That is realistic. So I have the habit of taking most of my profits at 1 to 2. You can take the full, you can take 80, 90, whatever, but I recommend taking almost more than half, protecting your trade. So I mean stop loss and break even, and then you can target your high time frame objective target liquidity. That would be the next high, because remember, market structure, price is doing higher high, higher low. What's the next thing? To make a new high. So what is sure is that it's going to take this high. So that's a target. So the moment you get in here, your stop loss thanks to the low time frame is this swing, and you target the high time frame, and then you're getting the big risk reward. Okay, and I will go into the examples and show you, because it's really this simple. If you follow those 3 things I said, time, market structure, and everything else, it will go, because it will work, because it's fractal. Okay, whatever happens in high time frame is happening in low time frame. So the downtrend in the low time frame, it's a retracement of the higher time frame, and the same for the opposite, like for a sell, it's exactly the same. Now we're going to go to some examples of this last week, and I will show you how this works and how you do a top-down analysis to know your bias. So we can I'll just delete all this. So we start on the monthly. You can start on a higher time frame, but monthly is enough because you're seeing the whole price action. Okay, there's no more than this. So you can see exactly what the trend is doing. And if you want to start from the beginning, we can start. You can see that we made a higher high, a higher low, a higher high, a higher low, and higher high, a lower high. Okay, and then you can. This could be a lower high, higher low again, higher high. So again, it changed the structure. Higher high, higher low, higher high, higher low, higher high, higher low. Then here there's another mini structure, but you can. It's like fractal, as I say. So you can do it like this, or you can even do it if you want to do it more simple. You can go like, because it's the monthly, higher high, higher low, higher high, higher low, lower high, lower low, lower high, higher low, lower high. Here it was a little bit fear, but then when you start going into a low time frame, you get the chances to trade. That's why nobody trades the monthly is crazy. You will be waiting for years to get a setup. And then finally here we got the sell-off and the break of structure again, so we are in a downtrend. After this we come back up, lower high, higher low again, lower high, and now lower low. So what's expected? It's expected to come back to premium and we continue selling, right? This is what, because all this is past, so the main is the latest. Obviously it can come back and break, but then we adapt and we say, okay, now it's bullish, so now I'll wait for it here and I'll buy here. So we are not we are anticipating. We can't guess where the price is going, because if I could guess, I would mortgage my whole life in that trade and become the richest person in the world. So we anticipate. So we are waiting for premium to sell back to discount. So now what happens? Now we put our Fibonacci to see where are we in the current range. Surprise, we are above premium already and rejecting premium. Now we look for our everything else, what I call. So in this case, see, we have support, okay, that people usually do like a zone or something like this, right? Could be something like this. Oh wow, break and retest, perfect. But not only that, even ICT is working. See, there is a tiny monthly fair value gap here. You can see it, and that's what I mean with the precision. ICT's precision is crazy. You see, there's a candle, but it's closing below the fair value gap. And as we say, the bodies tell the story. The wicks do the damage. So the body closure is the important. So we rejected this fair value gap in the premium and we come in lower. So where are we going now? At the same time, as I said, the most probable is this low, but at the same time the structure and the high time frame can change and we can break this structure and become bullish again. So what's guaranteed is that this swing, well, guaranteed, there's nothing, but more probable than this low, this actual low, is this range here is also pushing and we coming back to the discount of this zone and might fill this fair value gap here, fill it at least till the half. That's the mean threshold. Okay, so now we have a long-term bias bearish. Okay, so now we can remove all this and we can keep this open for target, and we scale down to the weekly. Now what's the weekly doing? Let's go with the market structure again. We got higher high, higher low, higher high, higher low, higher high, break of the structure. Okay, we just broke structure, important structure. So what comes after that? A retracement to continue lower. Okay, price won't just keep pushing. It can, but it's not normally doing that. We can see this in the swings. So the retracements are important as well. Price will react in PD arrays on the opposite, on past price that were respected for bullish. Like in this case, price created PD arrays that was supporting bullish price action, and once it broke it, those become in the inverse. So you can extend it in the chart and expect price to react there to come back down. What I mean is basically a PD array works in the both sides. It can support the idea and then also work like a retracement, like we did here in this monthly fair value gap. Okay, this monthly is working like a retracement. It's where price stopped pushing to come back down. So in this case, in the weekly, after that premium monthly fair value gap, we kept on pushing. We broke one structure, we broke another structure. All these are like relatively not equal lows but nearby, close. And this one, that's the most obvious. This one is damn obvious, like a long wick just there in the middle. So after breaking this whole structure, that many retail people would mark it like something like this. I don't know what it's called now, like rising wedge, something like that. Okay, the rising wedge has been broken. So this whole is the structure, the price action structure, like a piece that's being broken. Okay. And at the same time, we have a tiny fair value gap here. That whole price in the past, you can see here. Then it broke. It retested on the above. That's called inversion fair value gap, and now it's come back again. So there's where the retracement can start. And also, this weekly candle of 2nd October gave us the confirmation by creating the swing. A swing is when it has a higher low on the left and a higher low on the right. Okay, that's a swing point. So here's where we have the swing point, and now we can expect retracement to the 50%. So my bias is bullish right now until this premium gets filled, and we have a fair value gap here that's too high, but can happen with buy side liquidity over here. And we have inversion fair value gap here, but that's not in premium. So this one might just spike off here, so we can keep it. It's quite close. We need price to come above premium, but can respect this PD array. And depends. The moment the price is coming close to these levels, we see where it's reacting more, and in the daily will give us also more information. Okay, so for now we can keep this like more clean, not necessary to overload it. So now that we have the weekly done, we go to the daily and we do exactly the same stuff. The daily is the most important because we are like intraday excuse me, we are like intraday traders. So the daily is like our bread and butter. We analyze it every day. So we see we are in a downtrend, clear, lower low, lower high, lower low, lower high, and then here something happened. That's why I'm bullish. We see that this made a lower low, but this failed to hold, so it broke it, and now come back to discount. So what comes next? Up. So this is the second entry that I showed you all in the example previously. Failed to make a newer lower low and break the high. Okay, so this would be the 2020 mentors. This would be the first entry model that I taught you. Sorry, I made a mistaken there. So we have, like, you can say, the sweep of liquidity, the break of high, and then come back to discount to buy. So what is our current range in the daily? It's this. This is our discount, and where are we reacting? So we have this fair value gap here that's been hit. Last week on Friday, and we started moving to the upside. So for now, our buy side liquidity is this. So as I said, we go adapting to the lower time frame because we don't want crazy targets that will take months or weeks to get. So you see now how our target is more close to price action. So this is, we can remove this, and this is our buy side liquidity. We're expecting price to take at least this to maintain the bullish structure right now. And where can price retrace or come back. So we have this daily fair value gap. That's very, very important. That's why this week has been rubbish. It's been tough because we see that the daily fair value gap has been holding price and is still not closed above it. Now it seems like it's going, but we don't know. Still, it's lots of time left open. But probably if it closes above today, so the weekly will be bullish too, because the weekly currently is like this, and we would go the next week towards this target. So this is a daily fair value gap that's holding price for retracement. We go into the 4 hours. Now we know that this was a discount and that after this we can expect reversal, and it happened. Lower low, lower high. You'll be selling. Okay? We can sell all this till here, because that's the important thing of knowing bias. You can trade the retracement, that in lower time frames it's a trend, and then you can move into the higher time frame, that's the buy, when it shows you the shift. In this case, here's the shift. See again, so it comes back higher high, and then this confused the hell out of me. It happens. Price is not perfect, but it just end up being a sweep. How do we know it's a sweep? There's no candle break. Okay, so now this is what I'm expecting, because price has again gone up and made a higher high. So this is what I mean. See this low, that was the last higher low. No candles close up below it. I said the wicks do the damage, the candles tell the story. So if it's closing above, it's still maintaining the bullish structure, just took liquidity once again, and probably because of this daily fair value gap and even this 4 hours imbalances. So what happens is that here it broke, closing above it, so it's going to maintain the structure. So now our range is this, and surprise, we just tap discount and it seems like it's going up. So now a liquidity target, buy side liquidity can be this one. Oops, wrong, this one. We remove this, and what else? We have this 4 hours fair value gap here. We can remove this just for a more clean chart, and then we can scale down to the 1 hour and what's happening in the 1 hour, because it's not necessary that price comes to this fair value gap, and I'm going to explain why in just a second. So now in the 1 hour we have a higher low here, a higher high here, higher low again, higher high, and then all this retracement. You see, it's not clear, but this is the structure. So what's happening is just retracing to maybe making a new higher high. So this is our 1 hour range over here. It's also deep in discount, and we have a fair value gap here that got broken. But look at the time. Well, this is Thursday, and today, yeah, this is late in Thursday. We don't trade during this time. And then we're coming into Friday, so we can just delete this because we've seen it's broken, but the structure is still bullish, and we continue watching our PD arrays. We have this fair value gap here still that just gets tapped, but also what I prefer is this rejection block. Okay, if you don't know PD arrays, that you have to go to ICT's channel and study, or you can look for any YouTuber you like, because there is many good traders out there that are teaching the PD arrays, specifically each of them on short videos, 5-10 minutes. You don't need to consume ICT's hours videos, but it's recommended obviously because he's the creator and he's the author of it. So best to always learn from the creator of all this. So now we are in the rejection block, and guess what? We are into London. Wow. So we get into lower time frame, we get into 15 minutes, for example. What's the 15 minutes doing? The 15 minutes is coming in form of retracement into that PD array. So we can expect price to change, and it's done. See, this would be your current entry right now, live. So this would be your range. Surprise, it's in discount. Surprise, there's a fair value gap. And here, I'm going to show it in live, is where you go into the lower time frames and you get your sniper entries. See, we wait for the exact same thing. Market structure. Look at this. Broke. Come back, fair value gap. Sorry, better than fair value gap. BPR. This is a BPR entry. And I believe this is gonna hold 6 pips stop loss if you get into the 5 minutes, and you can target that buy side liquidity that we said. It's a 5. So remember, once you get into 1 to 2, 1 to 3, take most of the profit out, stops to break even, and chill, and then let the final target come, because home runs exist but are not common. You won't catch them every day. You can catch one a week, twice a week, or maybe a few of them a month. So don't depend on it, because we go for secure. We are doing this like a business. You want to make profit each day and maintain your capital each day. So that's the strategy itself. There's no more into it. And I wouldn't take this entry as such. I'm showing it live because it's just happening. It can work out, but I wouldn't take it because of the time. Because you see, we are at 5:56. So if this entry comes at 8:30 in New York, then it's a good entry. But we might just continue retracing until 8:30 and then continue the bullish movement up. So the valid entry for today was here. I'm going to delete all this so we can see the charts clear. Let's remove this as well. The entry was here. This is 3 o'clock. Okay, we don't trade before 3 o'clock, but we have a very clean entry here. You see, this is the trade. So simple. You see the pattern? Sweep of the low, break of the structure, come back. 2022 mentorship. Only 2 things happen. Price can only do 2 things. In the high time frame, the low time frame. Then the low one is the entry. So we see the sweep right here. We see the market structure break here. And what do we have? We have a fair value gap. That is our entry. We wait for it, and even liquidity, we can call it a turtle soup entry. And in 3 minutes, that's where I took it. It's a unicorn setup. Very powerful breaker with fair value gap. So we put a buy order here, stop below the low always. Some people do it below the fair value gap. I don't like that because it can wick do the damage and then close above it and maintain the bias. So I don't want to be out. So 4.5, it's enough below this low. And we target 1 to 2, done. It was a little bit noisy because it tapped once, twice, and then it went, and it was ranging a lot. So This was a little bit ugly price action. This week has been very ugly, but completely valid trade. And target that buy side liquidity. You leave a 10-20%, it's a 1 to 10, and that's how you catch those home runs. Okay, going into the lower time frame. So basically, this is the strategy. First, time 3 o'clock. We are trading after 3 o'clock. Second, market structure. I just did a high time frame for monthly, weekly, daily, 4 hours, 1 hour, 15 minutes, 5 minutes, 1 minute structure towards the lower time frames, and then everything else. Then you see fair value gaps are being respected. You see that support resistance is being respected. Maybe there is Wyckoff here. I don't know Wyckoff, not studied it. Supply demand. See, a supply demand, I studied that. Would have said that delete all this. Supply demand would have said that this candle here, it's a supply. Like this, it hit supply, and that's why it showed up. Yeah, okay, perfect. But it's not because of that. It's because of market structure. Market structure is the key in this game. It's funny because it's the basics. It's what we learn the first things and we forget about it. We get into the search of the holy grail. We want the magic button, the magic pill, or whatever, indicators, this, that, strategies. That's something that doesn't fail, and we start becoming a little bit like lazy. We go into one time frame, we want one setup, one thing, but that's blind. Like if I would go and take this setup, say like, okay, this is my setup, this would work, and we say, oh wow, perfect. But then maybe 5-6 fail in a row, and you say, oh, this is shit, this doesn't work. It's not that. It's that you're not doing market structure. See from where price is coming, what is the high time frame doing, and what's happening. So I just showed you we are in a retracement of in a discount of the high time frame retracement, and it's where probably the price is going to move. So basically what we have done is we go into 1 hour and we put these lines, okay? Push, breaking structure, retracement, and push again. Okay, now we go into 5 minutes and look, downtrend. So what we said is going to happen, we want to buy here of the high time frame. So when we see this happening, I've drawn it a little bit ugly just for the sake of it. So we see that pattern change like this. You enter and you buy, and it's happening during London Open. Volume, time, market structure, everything else. That is the key. And as a tip for psychology over, like for example, emotion over trading and all that, I would recommend one pair. In my case is euro dollar. This is universal. You can trade anything with this. Anything that has a chart and candlesticks, has market structure, this is going to work. Anything will work. And I would say, if you're learning, you're still not profitable or whatever, of a better calmness, mind, because as I said in the beginning, this we do for freedom. So one pair, one session, one trade a day. Keep it simple. Okay, even if you take in one trade a day, this is such a low time frame that you probably get one entry minimum every day. So we're talking about 5 trades a week. That's a lot. You talk that with many people, they will say you mad. You're taking 5 trades a day, 5 trades a week. Sorry, it's a lot. So don't worry. You will get your entry because we are to the lower time frame. We go into the 1 minute and you have the entry as well. Look how clean is the one entry. Avoid the noise. This is a 5 minute fair value gap. We know that. And look how clear, it's the 1 minute sweep, break, come back. Does it tap fair value gap? No. We are watching the 5 minute, continues up, comes down, continues up, continues down. What is the structure? This big movement. 5 minute is bullish, 5 minute is holding bullish, 1 hour is bullish, 4 hours bullish, 15 minutes not yet, now it's bullish, but we anticipate that. So it comes down. What do we have? We have 1 minute. Oh well, actually the 1 minute entry, well, it's before the timing, so we wouldn't enter. We could enter here after 3, but why didn't I enter here? I entered here because this lows, excuse me for the noise, I forgot to, just a second. Now this lows become liquidity, and I said London loves to manipulate. Well, the big players love to manipulate, so all these early buyers have moved their stops, or their stop losses are here or whatever, because or some people getting in here get stopped out, and there's where we want to get in. And this low was already swept, so I said that it's not probable that it comes to take this low again. It can, because we're still playing in that high time frame rejection block, and until it doesn't break, we're bullish. So it can come and sweep it again, but it's not so probable. And 5 minutes is it's making the higher high, so it's left liquidity here, it's left fair value gap. I'm going to take my entry. It's a breaker, a 2022 mentorship entry, breaker, fair value gap entry, whatever. It's a valid entry, I'll take it. Now, is this 100%? For sure, no. You will take losses, but the good thing is you are following the rules, you are following market structure, so you're playing a game of probabilities in your favor, so you can relax, keep your risk management in control, and as I said, take 1 to 2, 1 to 3. So you win more than you lose. When you lose, of course you lose, and you don't like it. Nobody likes losing, so you keep it to 1 trade a day. That will force you also to take the best setup and not take the ugly ones. Like, it's one shot you have every day, and you say, I'm not going to waste that shot in a stupid trade on a not clear market. You can always scale in. You can get in again. Like, see, here we have the next swing, right? It's damn clear. See, we've come back to its fair value gap and it's going higher. You can get in here. Stop loss is huge. You can scale down and wait for market structure shift here. Here there's no entry as well. Maybe you can enter here, but as I said, there's no time. Wait for New York instead. Okay, so time, market structure, everything else. I don't know what else to add. Actually, it's my first video, so hopefully this helps. If you feel that you need more information, you need more deep understanding, feel free to message me. We can try and do some live sessions. I don't know, give me ideas, because I just want to teach for free. In this case, help somebody else, because I struggle a lot. I've been trading since end of 2019, so you can say like 3 years already, 3 to 4 years, and I've struggled a lot. And this was the eye-opening for me. This market structure lesson, going back to the roots, to the stars, made me open my eyes. And believe me, just trust this is what I'm telling you, because I don't win or lose anything. I'm not charging you for this. I'm not asking for nothing. I'm just asking you for trust, because I want you to also get ahead in this, because I know what is a struggle, and that's the best feeling, once you start seeing it, because that saying is very true. Once you see it, you can't unsee it. That's the reason this week I've been bullish. Many people in a group that some of you might know are bearish and are targeting these lows, and I've said bullish, and I've said 1.064. I've said it several times. Why? Because this is 1.064. simple market structure. Anyways guys, I'm gonna wrap it up. I don't know how long is going to be this video. I've just tried to make it as simple as possible, and I hope you get some value from this, and feel free to message me anything you feel like. See you in the next one.